And weekend sunrise money man Scotty Phillips from the Motley Fool is here. Welcome to you, Scotty. It's an amazing result, especially when the rest of the world is going backwards, stagnating, but really going backwards. It looks like we're all set for quite a windfall. What does this mean for the economy and the government?
Yeah, it is stunning, one. It is amazing how quickly we've come back from COVID generally. And on the back of iron ore, as you said, $200 a tonne. This stuff costs $20 a tonne to get out of the ground. They're making 90% margins on this thing. And, this should be the sort of thing that you make a little bit of money on because it's everywhere. Everyone can get to it. But there's a shortage of supply. There's a massive increase in demand from China in particular. The government's doing well, shareholders doing well, mining companies doing well. The best part for the Australian economy is all the tax revenues that go to the federal government. Hopefully it sort of starts to fill in the budget hole, if you like, deals with the national accounts well, hopefully also adds to employment, keeps the economy moving forward, which is what we're supposed to be doing.
OK, so how reliant is the government on iron ore and I suppose all of us, the economy?
So at an economic level, not super reliant because there's not a lot of employment. Ironically, a lot of this is mechanised now. So iron ore mines don't take a lot of employment, a lot of flow on jobs, so it's important. The big impact, as I said, is company taxes. It really comes down to how much money gets shoveled by BHP, Rio Tinto, Fortescue into the government coffers because they're making such mammoth profits right now. And of course, shareholders who are getting plenty of dividends, the share prices are going through the roof as well. So there are both direct and indirect impacts. The good news, as you said, is it's already bigger than Brazil, as big as Russia. The flip side, we've got to be a little bit careful because if the price comes down again, then some of these trends do tend to reverse.
Is it too late then to get some resource mining stocks?
I think it probably is. I think realistically, if you think of the long-term iron ore price, even the government saying about $55 a tonne, as you mentioned, maybe it's 60, maybe it's 80, maybe it's 100, that'd still be half of the current price. So that's going to impact on profits, going to impact on the share prices as well. The time to do it is when the prices are low, not high. Once they're already high, that's already priced in. That's going to be a little bit careful. I wouldn't be jumping into iron ore stocks right now.
All right, good advice. As always, thank you so much, Scotty Phillips there from the Motley Fool.